Assalamualaikum guys, welcome back to our analysis of banking crisis in the global market. Earlier, we were examining the Silicon Valley Bank asset portfolio. So you can see here that most of the assets are in bonds in view of the exposure to the bond market that was undertaken in a big way by Silicon Valley Bank when interest rates were very low, but now due to the high interest rate, it has adversely impact the bond value, and therefore, what the next is the story that we have heard about the downfall of Silicon Valley Bank. But we want to understand how are these asset allocation were made. And I was mentioning earlier that the three bank commercial principles, that is the principles of safety, the principles of liquidity, and the principles of profitability. These are the three strategy that bank normally pursue in optimizing their asset portfolio. Let us look at one by one here. The principle of safety will ensure that bank will not make any loss from loan defaults and market volatilities. It is done to guarantee full redemption of deposit at all time. So this is done by holding huge cash balances. Usually this principle is sought during a recession. So bank would not want to make loans during a recession, because doing that, will be committing suicide, as any loan that the bank make during an economic slowdown will end up in default. So bank would want to be safe all the time, and therefore the strategy is to hold as much cash or idle balances as possible. Then the principle of liquidity will ensure that banks have adequate cash when needed to pay off deposit withdrawals. So liquidity refers to the ability of converting bonds or sukuk into cash without loss within a short time. So some banks will keep some portion of their assets in bonds and sukuk for this purpose, of ensuring that there is enough cash to be made available for honoring deposit withdrawals. And this cash proceed will be made by selling the bond at no cost or without losses, which we saw what has happened to Silicon Valley Bank, where the loss was made because the timing of selling was not right. And then lastly, the principles of profitability is pursued to earn profit by making loans, as the bank will be able to charge interest relative to bonds. So this principle is usually pursued during an economic boom. So this is the time when the bank will take the opportunity to make loans, because during economic boom, people have money to pay their loan obligation, and this is the time when the bank will make use of their loan strategy, and will keep as little as possible cash balances and bond investment, and putting focus on making loans so as to maximize profit during this, so-called time of economic prosperity. So when we look at the three principles of safety, liquidity, and profitability, so we can see that holding cash has the advantage, but the downside is that it has zero earning. Liquidity, the bank will be able to earn a decent earning, and will be able to convert bonds into cash when needed. But again, the earning will be not as high as loan, because when we look at the principle of profitability, loan will normally yield the highest rate compared to bonds, and so the upside will be higher earning, but the downside will be, it will also be highly risky. So these are the three principles of safety, liquidity, and profitability that the bank will pursue in their asset allocation strategy. And we can see, for example, in a recession, 2023 is the year where many of these experts were expecting to see most of the economies in the world today will fall into a recession. A recession technically can be defined as a contraction of the economy by 2 to 4%, and in two consecutive quarters. So a recession is a time when there is less production, there will be a lot of layoff, less income, and therefore less spending. And when there is such thing happening under an economic slowdown, the bank, top priority is the safety principle, right? And you can see that the asset allocation would be where most of the asset will be in cash balances, let's say 60 billion at 0%. And some of the asset may be put into sukuk or bonds at 2%, and minimum will be put into loans, because as we know, in a recession, it will be suicidal for the bank to make loans, because people have no ability to fulfill their debt obligation. And therefore, we can see that this is the desirable asset allocation strategy under an economic slowdown. And if you are to calculate the earning of the bank during this kind of economic situation, and we can see that the earning is the difference between revenues and cost, and the earning is coming from sukuk and loans, and these are actually computed given here. So the revenue will be 1.4 billion, and the cost of deposit will be 100 billion multiplied by 1%, so that will be 1 billion. So the total earning will be 0.4 billion, which is considered to be low, but this is what the bank actually want. They are not interested in making profit during a recession. They are more concerned about the safety of the bank. So low earning is acceptable, but the most important thing is to ensure that the bank remains solvent, and there is no red flags taking place in the banking operation. Economic boom, right? So during an economic boom and inflation, this is basically during, let's say, for the past 10 years, we have a lots of, when the central bank or the Feds reduces interest rate to almost zero, so we have quite a lot of happening in the economic activity. So the stock market, the bond market, the housing market were all in a booming state. So there's some economic bubbles here and there, and eventually inflation is spreading. But under this situation, profitability principle is top priority. So we can see that, for example, bank in pursuing the profitability objective, bank will allocate most of their deposit fund into loans and finance, 80% for example, 80 billion in loans at 10%, and a smaller proportion into sukuk and bonds, so 15 billion at 2%, and 5 billion in cash balances. And when we calculate the earning, we can see that the total revenue is equal to 8.3 billion, and the cost of deposit will be at 1 billion, and therefore the total earning for the bank during this period of economic boom is 8.3 minus 1 billion, which is 7.3 billion, which is much higher than the previous example when the economy is under an economic slowdown. But the risk here is, of course, what will happen when the bank is putting a lot of their asset in loans, if suddenly there is, an economic explosion and loans turns into defaults. So this is the risk that the bank will have to take when they are pursuing this kind of asset strategy during a period of economic prosperity. All right. So in the case of Silicon Valley Bank, we can see that the period early March is not, basically it is an inflationary period where the Fed has been increasing rates, from 0 to 4.5%, and this is a period. It is neither a recession nor a boom, but it is essentially an inflationary event where SVB was not able to see, what impact the rising interest rate will be upon its asset portfolio. But unfortunately, the strategy was very bad. That have caused the bank to be shut by the regulator in California. So we can stop here. Inshallah, we'll come back and discuss further about this interesting topic on banking behavior. So I can see you again again. Thank you very much. Assalamualaikum warahmatullah.